Cashin. He is on the Newsline. Art, great to check in with you today. So, it seemed coming into today's session that you could have made the argument that stocks were putting in a little bit of a stiff upper lip act. They were looking at yields going up, looking at the dollar staying firm and saying, we got this. Does today mean there's been a rethink of that in your mind?
I think there is a rethink, and I think that was the purpose that Powell had. He spoke more briefly than anyone had expected, and he hit on the key points he wanted to make. He wanted to disabuse, particularly the stock market, of his use of the word neutral in his prior comments. He said we had reached a neutral point, and a lot of people picked that up, saying, okay, so he said that we reached a point where we might be ready to pause. He made it clear in his initial comments today, neutral simply meant to the level where you are neither helping nor hurting the economy, and he wanted to get that point across. Secondarily, he wanted to get away from the concept, well, he had said that the softish landing was possible. He wanted to disabuse us a bit of that, so he talked about the potential pain to households and pain to businesses, and then he invoked St. Paul Volcker, and those were I think, the key things that he wanted to accomplish. And I think the market has obviously whipsawed, initially reacted negatively when he took away that neutral, and then took on a little more with the pain to the households, then some hope when he did say, at some point we might reach a level where we slow down or pause, whatever his phrasing. And I think that was the key. So very briefly, I think he accomplished exactly what he wanted, and he poured a little cold water on some of the stock market bulls.
Sure, without a doubt, injecting a little bit more, reason for pause for people to assume that this tightening phase is almost done and it's going to reverse. On the other hand, I wonder where it leaves stock markets just in terms of positioning. We're still, 13 or so % off the lows. There's still been a pretty lively back and forth in terms of whether we interpret this as potentially the end of the bull market in June, of the bear market in June, or really just another temporary relief rally. Did we get any fresh information on that in terms of the market action?
Well, I don't believe from what he said, but I think we'll find that as we progress, how traders start to think and how they begin to react. We're approaching the month of September, and I've been doing this 60-odd years, and seasonality is a factor. So I think the bulls are going to have a little bit of a tougher time, particularly if they are unable to push above the 200-day moving average in the S&P. They hit it like it was the third rail on the subway the last time. So if they stay below that, I think the bulls may wind up on the defensive. We may have to work a little lower. I don't know if we retest the lows, but get ready for a choppy September, I think.
Shepard Smith here. Thanks for watching CNBC on YouTube.